I'm Alan Kenny, Editorial Director with REIT.com, and we're in New York at REITWeek 2015, NAREIT's Investor Forum. Joining me is Jaap Tonckens, CFO with Unibail-Rodamco. Jaap, is the process of streamlining your retail portfolio just about complete?
We've done a lot. We've done more than we said we were going to do, but we re-underwrite every single one of our assets every year, so we can never say it's fully complete, because every asset that does not generate our hurdle rates, internal rate of returns, at least double-digit pre-tax, pre-leverage, gets disposed of. So it's never a complete process. Every year we'll review as to whether or not certain assets belong in the portfolio.
And how about your development program? Where's the focus right now?
About 2/3 of the development pipeline of 8 billion euros is focused on retail. We don't have a geographical limitation or particular focus. It's pretty much within our existing footprint everywhere, and wherever the opportunities deliver the highest returns is where we'll invest capital. We're not capital constrained, so every opportunity we see that generates our returns will be one that we'll be taking.
So what kind of trends then are you seeing with international retailers in the European market?
They remain very interested in Europe. We've identified 15 cities in which the retailers want to definitely have a presence. It's mostly American retailers, but also Asian retailers that, because of their markets domestically, may not necessarily see the growth anymore because their brands are so well established, but they're looking for a new market. And believe it or not, despite what you hear about Europe not being particularly, U.S. friendly, actually they're very much so. The U.S. is a culture carrier, and people wish to buy the brands, the successful U.S. brands, whether it's the Abercrombie & Fitch, which may not necessarily see quite the same enthusiasm in the U.S. as they do in Europe, but these are the kind of brands that are very, very popular. But one of the key elements we've seen is that retailers want to have fewer stores. Larger, better located flagship stores are one of the key drivers of what allows them to have the brand interact with the customer in the store. Despite everything you hear about online retail going to replace offline, it's not happening. Right? About 95% of all retail has an actual offline connection, and 90% of all retail is being done offline. So in that respect, you're seeing retailers wanting to interact with the customers because the experience that people have online is a very focused one. You go online to get something you want, and that's it, no experience. And what the brands have in common online is a presence on a screen. There's no differentiation, there's no interaction, there's no experience. And the retailers want to have people have that exposure in the store to the brands.
Well, thank you so much for your time.
You're welcome.
And for more on this and other REIT news and analysis, be sure to visit REIT.com.